The company is the world's most indebted property developer with about $300 billion worth of net debt, at least. Its bonds are included in a number of indexes across Asia. It indirectly creates more than 3 million jobs. Evergrande warned investors twice in 2 weeks that it could default on its debts and also noted its property sales will likely continue to drop. The company is so big that some say the fallout could have ripple effects beyond China. So what could be next? Joining us now from Hong Kong is Mike Bird. He's Asia Business and Finance Editor at The Economist. Mike, we really appreciate your time today. What would you tell us about, look, I guess maybe in some ways the question is, why has it taken the Chinese so long to crack down on Evergrande? This issue has been percolating for like 10 years.
Yeah, that's definitely the case. It's been a very, very long time. And I think the main issue has been a lot of Chinese growth has been generated by the property sector. This is 80% of Chinese household assets. It's a huge amount of economic activity, sort of a double-digit share of the Chinese economy. Evergrande is basically the most leveraged, aggressive player in this space, and it has been for a very long time. It's been able to chase a huge debt interest bill by essentially issuing more and more debt every year, taking on greater and greater liabilities from a number of sources, not just the bond market, not just banks, but its suppliers, its households purchasing homes from it, unbuilt homes, pre-sales, which are a huge part of the Chinese financing system for real estate. It's been able to outrun those debt interest costs basically until now. This is where the rubber hits the road, and it seems like it isn't able to do that any longer.
You know, if we go back to what Andrew Left warned about the company 10 years ago when it got him kicked out of trading in Hong Kong, he said that it's only held up. He argued it was insolvent then, and it was able to keep going thanks to junk bond sales and basically aid from the Chinese government. Why is it that this year, this moment, that has run out? It's not as if property prices have collapsed. This is not triggered by something falling on the asset side of the equation. So if we have Chinese cracking down on all these other sectors of their economy, I have to believe that maybe this is related, that they're drawing the line saying no more, and even this sector is not immune. And in that case, how can they mop this up and prevent it from causing harm to the Chinese people on the other side of the trade?
Well, I think you've got a feel for Andrew Left for starters. He got a 5-year cold shoulder order from the Hong Kong authorities. It was so long ago that he got the order that it expires next month. You know, he's going to be able to short Evergrande what's left of it in a month's time, and that's going to be fine. I think that what happened here is there's been a Chinese government policy. Now, the Chinese government's aware of the problems in the real estate sector and the property market in general. They brought in a policy called the 3 red line policy, which is essentially real estate developers that didn't pass 3 financial metrics. They were on the wrong side of them. They wouldn't be able to issue net debt in the bond market. That's been the big problem for Evergrande. The Chinese government finally seems to be taking property sector leverage seriously. And when they take it seriously, the most leveraged player is not surprisingly the first to start a real sense of collapse. And as you rightly addressed, the real problem here is where does the line end? You know, is this just Evergrande? Is it just maybe a couple of other heavily leveraged players and the rest of the sector will be fine? Because once you start pulling a rug out from under this stuff, it starts to get difficult. One of the things that Chinese property developers do is they buy huge amounts of land from local governments, right? Local governments rely on those land sales. It's their primary means of financing. So the local governments are inclined to jazz up, to build up land prices as much as possible. They sell the land for as high a price as possible. The real estate developers then sell on the land at higher prices to their consumers, the people actually buying homes. This is a sort of vicious cycle that's fed in for years and years and years. And this is why things are so bad in terms of the property market cycle in China, why it's gotten to such a ridiculous extent. And it's what you see falling apart in front of you now.
And this goes back to last August when they started this 3 red line thing. So again, not last month, but 13 months ago. And now it's really sort of picking up steam. And the authorities are saying to the banks on the other side of this, don't expect them to be able to make certain payments. If they're, I guess that makes us the biggest difference from Lehman is that in this case, the Chinese seem in some way to be shepherding this company into this period that it's entering. I don't know quite what to call it yet. So for traders, for investors who have watched this crackdown more from one sector to the next, Mike, what comes next? You know, should we, if this was the biggest elephant in the room, if everybody said this is how the Chinese economy grows, these property developers are too big to fail, is this the Chinese saying, no, they're not? And if so, then what?
I mean, this is the really interesting question. So I would say that the direct financial linkages between Evergrande and between the major Chinese property developers in general and the rest of the global financial system are actually quite low. Unless you own the bonds directly, and Evergrande's got a lot of US dollar bonds out there, but in terms of its overall leverage, most of it is Chinese. Unless you're directly exposed to that through the Chinese financial system, the Evergrande collapse probably won't mean that much to you. Mm-hmm. The real question is how this feeds through to real economic activity in China, right? 80% of household assets, you know what happens when home prices go up or down in the US, when they go up or down anywhere. It affects consumption activity. It affects behavior on the part of ordinary households. It affects everything. And the Chinese real economy has been such a source of economic growth globally for the last 10 years that pulling out, just even a couple of percentage points of GDP, you can see where that knock-on comes through. You'll see European luxury companies affected. You'll see commodity producers affected. If it has a major economic impact, it will feed through those sort of real channels.
Yes.
Maybe the FX side, the commodities, companies with direct sales to China. It might not hit. It's not like a layman type event. It may not be systemic for the financial system globally, but you will feel this if it continues coming through the real economy.
Very well said. Mike, again, really appreciate your time tonight. Thank you for staying up for us.
Thanks very much.
Mike Bird with The Economist.